1.5.2 Banking. Define. Authorized signature. The signature of an authorized person who may sign checks on behalf of the business.
Check account.
A bank account where a business receives a checkbook to write checks and make payments. Teller. A person who works at a bank and who helps clients to deposit or withdraw money. Banking. A bank is a financial institution that uses money deposited by clients for investments or saving, grants loans at interest, and exchanges currency. It keeps record of how much money clients deposit or withdraw. A bank charges people a fee for using its services. Each time you deposit cash at the bank charges a cash handling fee. The more money you invest in your bank account, the more interest you will earn on your investment. A business owner must open a separate bank account for the business. The owner and the business are considered separate entities and should therefore be kept separate at all times. A business must bank its money every day to minimize the risk of it going missing or being stolen. A deposit slip is completed when money is deposited into a bank account. All payments made by the business must be made electronically or by check. It is not good business practice to pay expenses from the cash register. Activity 5.5. Step-by-step explanation. In this question, you must calculate how much money is left in the bank. You must use two columns, receipts and payments. Receipts means money coming in. Payments means money going out. Transaction.
1.
Wesley deposits are $20,000. This is money coming in, so it goes under receipts.
Transact.
Ion 2. He buys a lawnmower for $3,500. This is money going out, so it goes under payments.
Trans.
Action 3. He pays $500 for an advertisement. This is also money going out, so it goes under payments.
TR.
And Section 4. He receives $700 for services. This is money coming in,
so it goes under receipts.
Transaction 5. He withdraws $200 for personal use. This is money going out, so it goes under payment.
TS.
Transaction 6. He receives $2,500 for services. This is money coming in, so it goes under rec.
IPS.
Transaction 7. He buys fuel and oil for $230. This is money going out, so it goes under payments. Now calculate totals. Add all receipts. $20,000 plus $700 plus $2,500. Total receipts equals $23,200. Add all payments. $3,500 plus $500 plus $200 plus $230. Total payments equals $4,430. Final answer. Money left in the bank. $23,200 minus $4,430 equals $18,770. Conclusion. Wesley H. has $18,770 left in the bank. Activity 5.6. Matching explanation. In this activity, you must match column A with column B. You only write the correct letter next to each number. 5.6.1. The difference between money earned and money spent when expenses are more than income. This describes a loss.
S.
The correct answer is F. 5.6.2. Money received by a business for services. This is current income. The correct answer is J. 5.6.3. A party to whom a business owes money. This is AC. Redditor. The correct answer is G. 5.6.4. The primary reason why a person starts a business. This is to make a profit. The correct answer is I. 5.6.5. Assets for long-term business use. These are fixed assets. The correct answer is E. 5.6.6. People who owe a business money.
T.
These are debtors. The correct answer is A. 5.6.7. Assets not expected to be converted into cash within 12 months. These are non-current assets. The correct answer is H. 5.6.8. A long-term loan on property.
T. His is a mortgage loan.
The correct answer is D. 5.6.9. The owner's interest in the business. This is owner's equity. The correct answer is B. May 6, 10. The owner's investment in the business. This is capital. The correct answer is C. 1.5.3 Subsidiary journals. A subsidiary journal is the book of first entry because it is the first time that the information regarding a transaction from a source document is recorded in the accounting records. Cash receipts and cash payments. Whenever a business receives cash, it is recorded in a subsidiary journal known as the Cash Receipts Journal. All payments are recorded in the Cash Payments Journal. At the end of the month, the business's bookkeeper uses these journals to calculate how much money the business received for the month and the amount of money it spent. 1.5.4 Accounting equation. Assets equals owner's equity plus liabilities.
Define.
Assets. Valuable things that a business owns such as machinery and buildings and benefits from generating an income. Liabilities. Money a business owes to a person or another business. Owner's equity. The difference between the value of the assets and the value of the liabilities of that which is owned. It also refers to the difference between an owner's investment in a business, capital, and any withdrawals made by the owner, drawings. All transactions are recorded on a source document and affect the accounting equation.
TIPS.
Accounting equation. Assets equals owner's equity plus liabilities. There must always be a balance between assets, liabilities, and owner's equity. Look at the following examples and the explanations to understand better. The first column. Hank's financial position is depicted in the table below. It shows his assets on the left, what he owns, bicycle, cell phone, and money in the bank. Owner's equity in the middle, the total worth of Hank's assets because he has no debts, and liabilities on the right, what he owes, which in this case is nothing, as he has no debts. The total value of Hank's assets equals his owner's equity, because he owes nothing. Second column. When Hank draws $200 from his bank account to buy a CD player, he is simply changing the form of his assets. His bank balance decreases from $1,000 to $800, but he now owns a CD player worth $200. This means his total assets remain the same at $7,500 because one asset, money in the bank, was exchanged for another asset, CD player. His owner's equity also stays the same at $7,500 since he did not lose or gain value. He only converted one type of asset into another. Hank still has no liabilities as he did not borrow any money. This example shows that transactions can change the type of assets a person has without changing their total value. The two columns in picture. This example shows how different transactions affect the accounting equation. When Hank buys a CD player for $200 cash, one asset, bank money, decreases while another asset, CD player, increases by the same amount. This means his total assets stay the same, and there is no change in owner's equity or liabilities. However, when Hank borrows $2,000 from his mother to buy an Xbox, his assets increase because he now has the Xbox, but his liabilities also increase because he owes his mother money. Owner's equity does not change in this case. These examples show that the accounting equation, assets equals owner's equity plus liabilities, must always stay balanced, even when transactions occur. Transaction 1. Capital invested, $50,000. When the owner invests $50,000 into the business's assets increase because the money goes into the bank. At the same time, owner's equity also increases because the business now owes that value to the owner as capital. Liabilities do not change because no money was borrowed. This means both sides of the accounting equation increase equally, and it stays balanced. Transaction 2. Buying equipment $500. When the owner buys equipment for $500 using a check, one asset, equipment, increases while another asset, bank money, decreases by the same amount. This means the total assets stay the same. Owner's equity does not change because no profit or expense occurred, only an exchange of assets. Liabilities also remain unchanged because no money was borrowed. The accounting equation stays balanced because the total value does not change. Transaction 3. Paying wages are 800. When the business pays wages of our 800, the bank asset decreases because money is paid out. At the same time, owner's equity decreases because wages are an expense and expenses reduce the owner's share in the business. Liabilities do not change because no debt is involved. Both assets and owner's equity decrease by the same amount, so the accounting equation remains balanced. Transaction 4. Receive rent R2000. When the business receives R2000 for rent, the assets increase because the money is deposited into the bank. At the same time, owner's equity increases because rent received is income, and income increases the owner's share in the business. Liabilities do not change because no money is owed to anyone. Both assets and owner's equity increase by the same amount, so the accounting equation remains balanced. Transaction 5. Loan from F&B R5000. When the owner takes out a loan of R5000 from F&B, the assets increase because the business receives money into the bank. However, this money is not income, it is borrowed, so owner's equity does not change. Instead, liabilities increase because the business now owes R5000 to the bank. The increase in assets is matched by an increase in liabilities, keeping the accounting equation balanced. Activity 5.7. Transaction Guidance. In this activity, you must decide how each transaction affects assets, owner's equity, and liabilities. Also show if it increases or decreases. Transaction 1. Owner increases capital by R80,000. Assets increase plus 80,000. Owner's equity increases plus 80,000. Reason: the owner invests money into the business. Transaction 2. Buy a vehicle for R50,000 by check. Assets increase plus 50,000 vehicle. Assets decrease minus 50,000 bank. Reason: one asset increases, another decreases. Transaction 3. Buy consumables for R400. Assets decrease minus 400. Owner's equity decreases minus 400. Reason: consumables are used up, so it becomes an expense. Transaction 4. Receive R2000 rent from a tenant. Assets increase plus 2,000. Owner's equity increases plus 2,000. Reason: income increases equity. Transaction 5. Loan of R12,000 received. Assets increase plus 12,000. Liabilities increase plus 12,000. Reason: the business now owes money. Transaction 6. Pay R1000 on the loan. Assets decrease minus 1,000. Liabilities decrease minus 1,000. Reason: part of the debt is paid back. Transaction 7. Buy equipment for R3000 by check. Assets increase plus 3,000 equipment. Assets decrease minus 3,000 bank. Reason: one asset replaces another. Transaction 8. Increase cash float by R100. Assets increase plus 100 cash float. Assets decrease minus 100 bank. Reason: money moves between assets. Transaction 9. Owner draws R900 for personal use. Assets decrease minus 900. Owner's equity decreases minus 900. Reason: drawings reduce owner's equity. Transaction 10. Receive R4000 income. Assets increase plus 4,000. Owner's equity increase plus 4,000. Reason: income increases equity. Activity 5.8. Transaction Guidance. In this activity, you must show how each transaction affects Assets, owner's equity, and liabilities. Also show if it increases or decreases. Transaction 1. Pay the bookkeeper's salary, R3000. Assets decrease minus 3,000. Owner's equity decreases minus 3,000. Reason: salaries are an expense which reduces equity. Transaction 2. Receive 1 month's rent. The yearly rent is R42,000. Monthly rent is R3,500. Assets increase plus 3,500. Owner's equity increases plus 3,500. Reason: income increases equity. Transaction 3. Owner increases capital by R4000. Assets increase plus 4,000. Owner's equity increases plus 4,000. Reason: owner invests money into the business. Transaction 4. Buy a vehicle for R30,000 by check. Assets increase plus 30,000 vehicle. Assets decrease minus 30,000 bank. Reason: one asset increases, another decreases. Transaction 5. Receive R500 for services. Assets increase plus 500. Owner's equity increases plus 500. Reason: income increases equity. Transaction 6. Owner draws R200 for personal use. Assets decrease minus 200. Owner's equity decreases minus 200. Reason: drawings reduce owner's equity. Transaction 7. Buy stationery for R100 by check. Assets decrease minus 100. Owner's equity decreases minus 100. Reason: stationery is an expense.